All right, ladies and gentlemen, we got some confusing mishap happening today. You got Citadel, Fidelity, Charles Schwab, these large traditional investment institutions that just launched a crypto exchange in the middle of one of the largest SEC regulatory crackdowns that we've seen. Charges against Coinbase, Binance. Cryptocurrency's really been in limbo in 2023. What we do have now is these traditional financial institutions say, hey, let's launch a crypto exchange. At first, I had to take a double take on this, look into the news and understand what is happening. And one important key thing that these traditional financial institutions were able to avoid, they were able to avoid the whole security type thing. We're going to be talking about this. Will more institutions do this, and will we see more exchanges getting around this possible loophole we're seeing in the system? Now, of course, if you're new to Data Dispatch, please hit that like button and subscribe for more videos, and check out some of the other videos on the channel as we explore many different topics. Let's pop it up in the headlines here. Here you got Citadel, Fidelity, and Charles Schwab as they launch this crypto exchange called EDX Markets. Now, with EDX Markets, just recently came out here as the official team made an announcement regarding the EDX Markets and talking about the Schwab and Fidelity backed type exchange. It has officially gone live, and hey, guess what? More backers are coming through. If you didn't think things were confusing, just wait until we start reading a little bit more. Now, this began trading for Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. So we're talking about some of the top tier, some of the most professional cryptocurrencies in the market. One big key takeaway though is that EDX is a non-custodial exchange. What does this mean? This means that EDX does not hold the funds. They do not hold the customer assets. One big difference is that, hey, Coinbase and Binance, if you have cryptocurrency on those exchanges, they technically hold the assets. They are a custodial exchange. EDX is flipping the table here by saying, hey, we're a non-custodial exchange. What does this mean? This means that they are able to avoid the crypto asset securities target that we've seen in the recent SEC filings against Binance and Coinbase, like we talked about in the beginning of the video, by positioning itself here as a non-custodial exchange. We're not holding your funds. They basically say that they cater to the needs of the financial institutions by having exposure to the crypto industry. Now, the big question is here, hey, they say they're a non-custodial exchange. Who's holding the funds then? That's the big question here, because they're talking about here, they do not hold the crypto tokens, and instead they ensure the customer assets are actually held at a third-party bank. Interesting here, let's keep reading. They say that this third-party bank is the one that's going to be acting as the crypto custodian, removing concerns regarding potential fund misappropriation. So you got this new market that the traditional financial institutions, Charles Schwab, Fidelity, blah, 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 you got more backers coming through, say, hey, let's launch a crypto market, get more exposure to the crypto industry, but we're not going to hold the assets. We're going to have third-party banks that hold the assets and hold the funds, so everything should be safe, right? I think that's a big question we don't know the answer to, but here it gives a good example saying here, Coinbase acts as the custodian for these customers' assets, like we've seen with these. However, with this, now third-party banks are going to be holding those underlying assets. So are they allowed to? That's the big question. How come these Coinbase or these different companies, they can't hold the assets, but third-party banks have the complete legal ability to? I don't know. I'm going to look more into it, possibly report back on the situation. And is that something that can be done? It looks like it is if you kind of have some of these top institutions that have launched this new EDX market. Now, talking about that, they will be also launching a clearinghouse business later this year that will enable to carry out the settlements. So the exchange right now, it operates as a platform for connecting a network of firms for executing and settling trades between the crypto assets and the fiat currencies. They're basically having many firms that are connecting a network. You got the third-party banks that are holding the assets, but they're going to have their own clearinghouse business later this year, it looks like, and this is shortly after BlackRock's filing for the first spot Bitcoin exchange traded ETF in the United States. We'll see this filing indicating that a sustained institutional interest in the long-term crypto market does stay there. Despite the recent industry setbacks that we've seen with the SEC, the regulatory concerns, and the regulatory and the enforcement by action, you still do have institutional interest, considering you have a whole new crypto exchange that was just launched by some of the top traditional financial institutional investors. So interesting to see there, especially with this digital asset platform. You have many headlines talking about this, and how is this going to evolve over time? Are we going to see more exchanges that utilize this possible loophole to get around the whole assets or around crypto being securities and these different companies holding these securities that are being claimed? We don't even know if the true regulatory enforcement is going to be able to be successful in labeling these I want to say cryptocurrencies as a security versus a commodity. Still a lot of things up in the air, but interesting to see there. We'll keep you guys open. Make sure you could check out EDX, of course, and I'm not affiliated with them anyway, but see what it's all about. I'm going to be taking a look at them, reporting back on you and saying, is this possibly a way that institutional and investors could still be kind of interested in cryptocurrency or still have, get their feet wet in the water? That's all about all I have for you guys today. Take care. Peace out, and I'll catch you guys later. Subscribe.